Of course, what wasn't moving in the right direction was factory output numbers we just got out. They were disappointing. Retail sales were, perhaps unsurprisingly, very much missed the mark as well. How much of an extra boost are markets and the new leader going to get given the expiry of the state of emergency measures today?
Well, you're right that August was a bit of a write-off during the Olympics. It was a bit slow here. And of course, the other issue is the production bottlenecks. But it does look like that will be the bottom. Things are improving from here. The end of the state of emergency will make a big difference for Japan, especially in Tokyo, which represents a large part of the national spending. And so things look good going from here. We will have some lessening of the bottlenecks. The economy will open. Corporate profits are already zooming, partially due to their global exposure. And the yen is also weakening, especially overnight, as you probably saw. So all these things add up to a very good situation, especially for the fourth quarter, which could see a very major beat of consensus right now.
How much of a tailwind really is that weaker yen, right? Because we're really starting to try and assess the various impacts of that strengthening USD.
Well, it's very helpful for Japan, not only because it helps exporters' profits, but Japanese people, their mentality still is very much determined by how strong the yen is. If the yen is very strong, then they think that their economy, as an export-oriented nation, will struggle. And when it's weak, they tend to be a little bit more optimistic about things. So it also helps consumer sentiment.
John, let me throw at you a bigger picture question. We have seen Kishida sort of dangle the idea of this new type of Japanese capitalism, which favors redistribution of wealth and also wage increases. And of course, we have in China that drive towards common prosperity. We have South Korea also clamping down on big tech. Is this renewed focus in Northeast Asia towards more income equality something the markets should be paying more attention to?
Yes, and of course we had the U.S. example too with the Biden administration and the Democratic House of Representatives. So yes, it's a bit of a global theme, and it's probably a good one. The inequalities that were related, especially to the pandemic, they were bad even before that, but even worsened during the pandemic. These are issues that have to be addressed, and Japan already is a very, very egalitarian society, perhaps the most in the world. And yet, of course, many small businesses and people suffered here tremendously. And I think Kishida-san will definitely do things to try to alleviate that. A lot in his term will depend on what happens to the course of the virus. Just like Prime Minister Suga, a lot of his popularity will be decided by how well he does with the virus. And so it's very important for him and for the region.
In China, of course, we have seen that tech crackdown, that property sector crackdown, all of that really already affect the markets, right? This GTV chart on the Bloomberg showing how it's really shaping up to be the worst quarter for China since 2015. Does this mean that perhaps there's a little bit of value to be found there?
Yes. I mean, there's always some sectors, even in China at this moment, that provide value. I mean, there's a lot of low PE stocks there that perhaps if you're a long-term investor, there is value. And of course, on the growth side, there's some still very attractive companies there as the country shifts to an even higher tech mode. Those kinds of companies are doing extremely well, and we're quite enthusiastic about them as well.
Are you enthusiastic about some of those assets?
Me personally, I certainly believe that China is a good long-term economic growth story. And we do think that they will be able to overcome this current slowdown. There's still a lot of growth there to be had. So, yes, there's a good story for China, especially in the long term.